Hi, my name is Josh Mahony, Chief Market Analyst at Scope Markets. Let's look at the week ahead for the week starting Monday, the 15th of April. There's a whole host of key economic data points to get through. And certainly coming off the week that really was headed up by the US inflation report, but also that ECB meeting. There's plenty of volatility within the markets at the moment for traders to sink their teeth into. From a top level perspective, we can see that there's a handful of really significant events across pretty much every major market out there if you're looking at currencies in particular. So we've got the likes of retail sales on Monday from the US. On Tuesday, we've got a whole host of Chinese data points. The chief amongst those would be the GDP number, but we'll dig into that in a little bit greater detail. We've got the unemployment rate, so essentially the jobs report from the UK, and the ZEW economic sentiment survey out of Germany as well on Tuesday, inflation rate from Canada and inflation rate from New Zealand. So particularly interesting Tuesday. Wednesday, we've got the inflation rate from the UK. So inflation, a big theme this week. The Australian jobs report on Thursday, and once again, inflation from Japan on Friday, leading into UK retail sales. Three topics for us to be covering this time around. First and foremost, I wanted to cover New Zealand, but also with a nod to what's happening in terms of China. Of course, like I said, on Tuesday, we've got this sort of data dump coming out of China. We're talking about industrial production, retail sales, fixed asset investment, unemployment rate, industrial capacity utilization, the house price index, and of course, like I said, that GDP figure. And the hope is that potentially we'll see things pick up. Certainly on the GDP front, it's going to be a little bit of a tight one, 5% from 5.2. So market's expecting a little bit of a move towards the downside, but that could be the only thing that's potentially close to picking up, because if you're looking elsewhere, the likes of retail sales, industrial production, unemployment rate expected to decline, so that's a positive. Fixed asset investment, all expected to head lower. House price index looks like the only thing that's forecast to improve, but that still would remain in negative territory. So arguably, we're expecting to see negativity across the board. The one area that is a little bit touch and go is going to be that GDP rate, which at 5% is only slightly below that 5.2%. So maybe they can pull the rabbit out the hat and really try to outperform on that one. And some people might say that that's the most important. Well, typically that's the more lagging one as well. So certainly this is going to be a big one. And, you know, if you're looking to trade this, you could trade things like the Hang Seng and Chinese related markets. You could trade the Australian dollar. You can trade the yuan, but it's less traded, I would say. And instead, I wanted to really tie this up with the inflation rate coming out of New Zealand. Bear in mind, as you can see here, it's quarter on quarter. So this is something that we see every once in a while. We don't see it monthly in the same way as we do out of Europe or out of the US. And so that really should introduce greater volatility around this report. Now, it's difficult because essentially what you're looking at here is, let's say last time around we saw 0.5%. You could say, well, that's great. We're tracking on a 2% sort of pathway, because, you know, if you analyze that out, we're pretty much back down to target. But that isn't something that has been experienced over across the board. And so what happens this time around, we're really informed markets, because as you can see here, expectations 0.9. If we see that, then it really sets back the idea that we're going to see the AUDNZD cut rates anytime soon. We did just see their rate decision recently. They, of course, held rates, but there was a nod towards a possibility, and markets now pointing towards August as the potential rate cut time. Well, if we see 0.9 in this inflation gauge, it really does point towards an extended period of time where they might need to battle against inflation, and that possibly we might see some strengthening of the New Zealand dollar as people realize that perhaps we're not necessarily going to see that August rate cut coming into play. The currency pair I wanted to show you for this one is the Australian dollar against the New Zealand dollar. I like this one because by and large, you're trading two assets that are highly correlated. And so you sort of see the differentials. It takes away some of the sort of innate aspects of these different currencies. For example, the association with the Chinese economy, you're going to see that sort of dulled down a little bit here because, of course, both of them are heavily reliant on exports to China. What's notable here is that this is a market that by and large has been relatively consistent in terms of its sort of consolidation over the last year and a bit. Certainly price action very rarely strays outside of these boundaries. To bottom end is 105s, essentially 105.8s down to 105.5s, and the top end it's sort of 109.5s up to 110 kind of area. Very rarely do we move out of that boundary. And what's notable here is that, of course, we saw this rally up into the top end here at 109.5, and we're starting to see some selling pressure coming into play here. Now, bear in mind that inflation by the last sort of metric, last gauge in Australia was higher than what we've seen in terms of New Zealand. So that might sort of tell us a story about Australian dollar strength, because they might have to hold off for longer. But if we see a 0.9 reading on the inflation metric, it really could see some New Zealand dollar strength coming into play. That could drive the Australian dollar against the New Zealand dollar lower. So keep a close eye out for this. You can see this big sharp move towards the downside that took hold on Wednesday. Does this mark the end of this recent trend? Well, let's look in terms of sort of swing highs, swing lows, and see that trend. So within this, you'd say, let's just get the trend line on first and foremost. You can say we've very clearly broken out from this trend here. In terms of swing highs and swing lows, certainly we have broken through a number of them on the way down. You know, if you're following that sort of intraday 1 hour trend, that has been broken. I would say greater confidence comes with a break through this 108.6. The question mark is, are we seeing a sort of big retracement of this move before we recover? And so it makes sense to put your Fibonacci on and see exactly where we stand from that perspective. And you can see that price action has fleetingly moved beyond the 76.4 Fibonacci level, but held up at that level ultimately and starting to move higher. So to the downside, if we start taking out this Fibonacci level and this low around 108.8, then it points towards a possibility of this rolling over. And certainly if we see that strong reading coming out in terms of New Zealand inflation, that could see us break towards the downside, and a move through 108.6 would be required to really point towards us having topped out, and that this big sort of consolidation pattern, this range essentially comes back into play. Otherwise, if we look towards the upside, you'd want to see a breakthrough this area where it's prior support and now turned into resistance here around about 109.2. As long as we remain below that level, there's a good chance what we're seeing here is this sort of stepped move lower, and that this current rally is a retracement. With that in mind, let's just quickly grab that Fibonacci retracement tool once again. And you can see, once again, we're looking at the 76.4 fib here. We've rallied up into it and we're starting to roll over here. So possibility that this rally is already done and that we could see this fade from here. But I think the fireworks really should happen around that New Zealand inflation gauge. Because if we see it come out strong, then the idea that we're going to see that August rate cut could start to go out the window for the RBNZ. Next, I wanted to talk about, here we go, Canada. We've also got inflation coming out of Canada, and this, of course, will be notable given the fact that we've seen the Bank of Canada also just the week just gone come out, and essentially markets are now pointing towards a likely June rate cut. This is notable because, of course, we're seeing the pushback against the Federal Reserve's June rate cut at the moment. And ordinarily, you'd think that they would like to move in tandem. Markets are now thinking that we might see Canada do the opposite. And in part, that's because of the downside we've seen in terms of core inflation. As you can see here, 2.1, expected to break below that 2% marker down to 1.8% this time around. So that could certainly be a driver of weakness for the Canadian dollar. Inflation rate expected to tick lower, 2.7 from 2.8, but certainly I would say core is probably more important. If we can get that core down, then you can say, as a Bank of Canada member, you'd say, well, look, we've done our job. It's not our job to control energy and food prices. It is our job to control sort of underlying prices within the economy, and that's what our interest rates will impact. Bear in mind, of course, we've got that volatility in energy markets recently. The upside in terms of energy, you would think would be beneficial for the Canadian dollar. But it's worthwhile looking at this chart here. We've got the daily time frame here for dollar CAD. Let me just put that up on your screen. Daily time frame here for dollar CAD. And what can we see here? Well, when oil goes up, dollar CAD goes up. And when oil goes down, sometimes there's a lag, but generally we're seeing it move towards the downside. This isn't always the relationship. If you look out in terms of the weekly time frame, you can see some periods where we've got an inverse relationship in terms of dollar CAD, and you see people more focusing on the value of the underlying commodity export for the Canadian economy. But bear in mind, both economies big exporters of oil, of course, but the key thing here is that now we're seeing this positive correlation in no small part due to the fact that essentially the higher oil goes, the more we see people very fearful around the possibility of a resurgence in inflation. That's a risk off play that should benefit the US dollar. And we're seeing that exactly here. So if we see further upside in terms of oil prices, that should be good for this market. So keep an eye out for that as well. If I just strip out oil from this, let's just look at the chart itself. Essentially, I'm talking about the possibility of a drop down below 2% for that core inflation gauge. That should give us greater belief that we're going to see a June rate cut from the Bank of Canada. Of course, we're not seeing that same confidence for the US economy. So it looks like there's a good chance for further upside here for this market. And as you can see here, the sharp rally, the pullback, the next strong move higher. And now we're seeing a breakout from a relatively short and shallow pullback here. Certainly not as protracted a pullback as we saw here, and certainly not as deep a pullback. If I'm to get a Fibonacci drawn on here, let me just get my shallow retracements. We should be able to see that this is a 23.6, the most shallow one there is. So that says a lot about the innate strength and bullish confidence within this market at the moment. And this breakout to me does signal the possibility of further upside to come. And if we see energy upside, that should be beneficial for this market. And if we see weakness in terms of that inflation gauge, that should be beneficial for this market. So dollar CAD, a really interesting currency pair to be watching out for in the week ahead. And finally, I wanted to touch on the UK data. Essentially, I'm going to put out a bigger piece about the UK data with a deep dive into the inflation metrics in particular, as I often do. But of course, this marks a very important week because we've got the unemployment rate and essentially the jobs report out on Tuesday. Then on Wednesday, we've got that inflation report. And on Friday, we've got retail sales. So it's all happening in the UK next week. Well, what market do I want to look at for this? Really, it's going to come down to the classic. Of course, you know I'd do it, or you didn't. It's sterling Swissy. I think this is a really interesting one, quite frankly, because the Swissy at the moment has been really selling off in a very notable manner. Bear in mind, the SMB decided to cut rates ahead of their counterparts. Fine. That's because they have a significantly lower inflation rate. But what we're seeing here is a rally up into this area of sort of key resistance level. You can see here, 115. That key resistance level has really changed the tone, I would say, of these recent gains. So very consistent gains, but look at the last 4 weekly candles. Every single one of them has rallied up towards this area of resistance. You know, you might also put this line here because you've got these peaks all around here. So you've got this zone of resistance that also we can push back into this area here. So this area of resistance here, as we come into it each week, we're sort of fading. So that means that we're seeing pullbacks within those moves. And you should see that on the 4-hour chart, right? So there we go. We're seeing this very consistent move with sort of minimal pullbacks, really. And then we start coming in towards this top end and we start seeing bigger swings, bigger retracements. Does that mean we're about to see this market roll over? There's a good possibility, quite frankly. And, you know, make sure to check out the wider video that I'll provide in terms of UK inflation in particular. But I think there's a good chance that we do see UK inflation roll over in a very meaningful manner, and that could start to turn the tide. We've seen such a protracted period of appreciation for this market. I mean, look, from the low that we saw essentially at the beginning of the year to where we are now, we're talking about a over 7% move in 3 months. So are we going to reverse this, or are we going to continue the trend? Well, the trend does still remain in play. Let's just try and grab a trend line and see exactly where that's going to. There you go. So the trend still remains in play, right? But there's some warning signs here. The warning signs are this. You've got the wider big resistance level. You've got those long upper shadows or upper wicks coming into play in the bigger retracements. You've also got this inability to create the new higher high. Look at this here, right? So you can see previously high, 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 high. Now, all of a sudden, lower high, higher high, flatlining high, and now selling off. So if we see a breakdown through 11357, this could point towards a potential near-term top here for sterling Swissy. A lot of it's going to come down to the data. Nothing is more important out of these data points than the inflation gauge. And if we see a significant move towards the downside for UK inflation, then that could really start to turn the tide on this pair. If it doesn't, and if we see a strong inflation gauge, then look towards the upside. You want to see a breakout through this area of resistance. And that would be the kind, 115 essentially. If we break up through that level, then you're looking for a continuation of the trend that's in play. But certainly a really key market to be looking out for at the moment. And if you look in terms of market expectations for that UK inflation rate, both expected to decline. I think it's going to be really important to look out for that monthly, the month-on-month figure, 0.5 expected. If we see that coming in lower, then it could give us greater confidence that we're going to see a significant period of disinflation. The question mark at the moment, of course, is what's happening in terms of energy prices. We've seen that move upwards in terms of crude oil. Will that drive those monthly inflation metrics higher and slow the pace of disinflation and really set back the hopes that we're going to see rate cuts in the near future from the Bank of England? Keep an eye out for this one. It's going to be a big mover, but that sterling Swissy trade looks particularly interesting for me. Potential top, maybe it's not. The trend still remains in play, but ultimately we've got some key levels to be looking out for around this big week for UK data. And I'll be there for it. I think it's going to be really interesting. So hope this has helped you guys. Check out the other videos that we've got. Like, subscribe, and have a good weekend. Thanks a lot.